From one earnings candidate to another one, and that is Mahindra Lifespace. They also had announced their Q4 earnings, and if you look at the earnings fine print, the loss is narrowed on a year-on-year basis. The revenue is coming at around 56 crore rupees versus 101.4 crore rupees on a year-on-year basis. Let's get the management on board and talk more about the quarter gone by, as well as what's the outlook for FY22. So joining us now is Mr. Arvind Subramanian, who is the MD and CEO of Mahindra Lifespace Developers. Good morning, Mr. Subramanian. Thank you for joining us on ET Now. Let's talk about the quarter gone by. Could you take us through the highlights of Q4 as well as how FY21 had panned out for Mahindra Lifespaces, as well as we've seen the loss narrow in Q4, but are you seeing some encouraging trends as well?
You know, FY21 has really been a tale of two cities, if I may borrow that phrase, because it started with a complete sense of uncertainty and gloom, and we were all just frozen in the headlamps. For the first 4 or 5 months, there was almost nothing we were able to do, and we were finding our bearings. But for the real estate market and residential business in particular, there's been a sharp rebound since then. So over the latter part of the year, particularly the fourth quarter, we have seen very brisk business, which augurs very well for FY22, despite the pandemic that we are currently caught in the midst of. I think there are enough indicators in the pattern of business in FY21 to suggest that demand is robust and deep, and that should not be a worry. It's more around well-being of employees and how we build our supply chain, the resilience in the supply chain. So in Q4, we actually did more business put together than the first 3 quarters put together. And this is across both our businesses, our residential business, as well as our industrial business. So B2B and B2C both. Q4 was larger than the sum of Q1, Q2, and Q3 put together, which is extremely heartening. I think the highlight for us has been residential sales over the last year. We've done close to 700 crores of net sales. And what's even more heartening about that is that it has been a broad-based performance. Every single project has sold across price points, across locations, and that's been very encouraging.
Let's talk about FY22. How has it started for the company, given that we are seeing actually a lot of localized lockdown due to the COVID-19? Are you seeing the customer interest reduce? Also, if you could tell us about what are the planned launches that are there in the pipeline?
Look, as I said, Q4 had picked up a very, very brisk pace for us. And, you know, it's been a shame that we've had to hit the brakes so hard towards the end of Q4 because of the challenges around us with the second wave of the pandemic. As we stand today, there is certainly very subdued business, both from a demand side as well as we are seeing some challenges from a supply side, both labor availability as well as commodity price increases. That kind of worries me going into the next year. As I said, I think demand will come back as and when we have a possibility of opening up. I think demand will come back. The supply side takes a little more time to build back up. So the constant yo-yoing between high levels of activity on construction and then low levels it is much more challenging to deal with. We have built very strong capabilities over the last year to conduct our sales online. In fact, we had done an entire new project launch in October, completely online, what we called a zero-touch sales, where we didn't meet any customer face-to-face. There was no site visit. There was no show flat. The entire launch was done virtually using visualization tools and interaction tools with the customer. And we received very good response. And that has helped us build this capability to engage with customers remotely and conclude the sale. It is not just about an inquiry. We are actually able to conclude the sale and even register the agreements digitally now.
Mr. Subramanian, a lot of companies are facing a rise in input cost rather, and particularly in your sector, the increase in raw material costs like iron and steel is bound to pinch a little bit. Are you confident of passing on those price increases to the customer?
Yes, to me, that is a bigger worry than demand, as I've been saying. I think demand is robust. It'll come back when the market opens up. The commodity price increase, steel has gone from roughly 40,000 rupees to 60,000 rupees a ton over this period. And that is a big challenge. We are tackling that through multiple levers. One is being very, very sharp about our design, being very efficient about our designs, continuously value engineering our designs, even after the initial design is done during the construction phase, trying to squeeze out a few percentage points of cost every few months. But also structuring our contracts with our suppliers and contractors in a manner that buffers some of these cost inflations. And finally, look, we are choosing very consciously to do smaller size projects so that we're not locked into price and cost mismatch over a longer period. So we get in and get out of our projects quickly so that even when there's a cost inflation, we're able to mitigate that impact because we are exposed to that for a shorter duration.
Now, what are the key trends, Mr. Subramanian, that you've witnessed in Mahindra World City Centres across Chennai and Jaipur, and the rental negotiations or renegotiation trends that you've seen with a commercial clientele? How has that panned out on account of what we've seen starting in February with the second phase or the second wave of the pandemic?
Yeah, so it's actually quite interesting. In our world cities, in both Chennai and Jaipur, we've got very, very strong positive feedback from our clients that we were able to reopen these world cities for operations much quicker than other facilities in the neighborhood because of the kind of operations and management capabilities we have, the protocols we were able to put in place for the safety of the workers and employees who are coming into the world cities. So in fact, from a business continuity and resilience standpoint, these two facilities have become case studies in their local administrations on how we can quickly get people back to work, to productive economic activity. So because of that, actually, there's been no pressure on pricing in those businesses. Now, if one were to take a step back and look at it from a bit more of a macro picture, I think with all that's happening across the world, with the realignment of global supply chains to become more regional, with China getting a little bit isolated in the global supply chains, and the policy thrust in India with things like the production-linked incentive scheme and Atmanirbhar Bharat, the next few years, to my mind, could really be a golden period for manufacturing in India. And if that does play out as the promise holds, our world cities and origins, the 4 industrial parks that we have, stand head and shoulders above the competition in terms of infrastructure readiness and speed to market, in terms of being able to set up your facility very quickly and start production very quickly.
All right. Thanks, Mr. Subramanian, for taking the time, for answering our questions. I wish you all the best for the year to follow. On that note, we're taking a short break, but on the other side, we've got a lot more in store for you, so do stay tuned.